All right, guys, Paul Singh, Market Speculator with the trade report for Thursday, July 23rd, 2026. Today is the big day, Google and Tesla earnings. We've been waiting for this day. In terms of earnings season, this is the day where it really feels like it gets started or underway, even though we've had earnings for about a couple of weeks now. The banks reporting was big. And of course, Netflix and some other companies, United was really good for airlines. But this is the day with Tesla and Google, and look what happened. Google, the gap down, and Tesla here, the gap down as well. Now let's go over the numbers. We usually don't parse these uh, this close, but I think it's important for these two stocks and a lot of the big techs here. And again, we're not reading earnings reports. We're just basically going over the numbers and some of the guidance and what's going on with these companies, because it helps guide us in how we want to trade these things, or if we want to trade these things. We're coming to two conclusions with Google and Tesla for now. That can change very quickly in terms of price action. At the end of the day, all this stuff doesn't matter if price action is telling us something different. Remember that. We're technical analysts, short-term trading. Now, if we're doing longer-term trading, of course, it's different. But let's talk a little bit about what happened. Now, we went over Google and how there were lofty expectations for revenue and for cloud computing growth and cloud infrastructure. And if we look at Google here, if we look at the revenue that was expected, 116 billion, came in at about 120 billion. So big beat here. And look at the earnings, the non-adjusted earnings, 2.89 was expected, came in at 911. Now, if it's adjusted, comes on much closer to this number, but still good earnings. And the key here is growth in companies, this long in the tooth. You don't usually see huge growth rates. But because these guys are leaders in AI, we're seeing big growth rates in some of these companies. Specifically to Google, we talked about this yesterday. The expectation in their cloud computing division was supposed to be, and that's where a lot of the profit is coming from now related to AI. That number was supposed to come in at 60% growth. And you look at that and that seems crazy, right? And that's what needs to happen for Google to keep these lofty price valuations in the stock. Came in at a whopping 80%. Huge. And you would expect a big breakout. But there wasn't a big breakout. There is a gap down. We can see here, I've been day trading these. And I'll talk a little about the day trading in a second. I know some of you are also in the day trading group, and you move over to swing and watch these things as well now that you have access to everything. But look at that, 6% gap down. You wouldn't expect it with 80% growth in their main driver, which is cloud computing. And then Tesla, 13% gap down. So if we look at that here, you go, wow, this thing should be gapping up. And even look at the revenue on Tesla, expected 25 to 26 million, came in at 28 something. So beat on revenues as well. And we love revenue beats because that's where we see the real sales, right? How is the company doing? Now, earnings obviously is very important, but earnings can come in at different numbers for various reasons. And the reason they're coming in lower here, now when this is adjusted, it comes in much lower than 911. It's close to the $3 here. But that is because of the spending. And you see the quarterly CapEx, and there are other things related to spending, but CapEx came in at 45 billion for Google, and that's all related to essentially AI, or most of it is related to AI. And you can see Tesla's coming in at almost 6 billion, 5.8 billion. So that is what's concerning the market overall. And it's funny when the market reacts like this because the market knows this. This is no surprise. That's why I laugh at these gap downs. This is not a surprise. We knew that, so why is the price action at that high anyway? But I guess hearing it spooks the market. But this is to be expected. This is kind of that short-term overreaction that the market often does, when logically we know what we posted in the chat. It takes money to make money, right? And these companies know that. They're setting up for the future, not this earnings quarter. And this happened with the big internet boom. And you look at any boom that has happened. We always talk about the railroads in the 1800s, and you could go to computers in the 1970s and 80s as well. And that is, it takes spending, it takes research, it takes development, to provide the infrastructure for these things. So there's an expectation of a lot of spending, and that's going to eat into earnings for some time. But revenues is what is important, and they are crushing on revenues. Now, in terms of the future, Google is expecting more spending. So the market should know this: 195 to 205 billion. It's 44 billion right now. So a lot more spending is expected. But I think this, more than anything, maybe this is what spooked the market, because the market thought it was going to be 180 to 190 instead of 190 to 205. In the grand scheme of things, so what? Right? These are crazy numbers anyway, right? It doesn't matter. We know Google is going to do well with this. They know what they're doing. And you can see what the primary drivers are. Of course, cloud computing and AI. And then Tesla reaffirmed what they were already expecting, which was 25 billion. So these are the numbers. Of course, we don't do this with every company, although for all of the stocks we watch, I take a look. But these ones are really important. So we'll get back to the swing in a second. Since I have the day trading up, I will tell you guys a couple of my favorite setups for those of you who day trade, and I'm on the 1 minute charts right now. A couple of my favorite setups. One is when there's an opening range on a gap down, and then you get a break of that range. You can see with Tesla, it was right here. And with Google, it was right here. That is where I like to short. Don't short right away. And then you can see how both of these went down quite a bit. If you shorted here at about 320, the low here was 315, 5 points on a day trade. For swing, it doesn't matter, but for an intraday trade, very good. And you can see here, Tesla went down from 335 down to 320. So very good setup there. And then when we get to the midday after that first hour, there is almost always a big reversal. Now, normally with our reversals for swing and even some day trading, we look for those reversal candles. That's not what I'm looking for. I'm looking for because there's so many fake outs in day trading. I look for the remount of the 9 EMA for the intraday. And we had that here. And then I played the move to the VWAP, which is exactly what happened here. And you can see that here with Google. These have been textbook. And you see this a lot, especially with the big stocks that do this. And then watch for the VWAP break. And you can see here, Tesla is getting close, hasn't done it like that. Google has already done it. When you get the VWAP break, often you get some very big moves in here intraday. And sometimes there's a failure and wait later for it to attempt again if it does fail. So a little about day trading. We usually don't talk about that here, but you can see very textbook kind of day trading setups. Let's get back to swing now. And you can see the day trading, the daily charts for our swing. Now notice here why I don't like the Tesla gap down, because it was already in a topish pattern, and that's kind of triggering here. So I'm not considering this for the gap down reversal. And the numbers aren't blow away numbers like they are for Google. Now Google's different. Notice here, fantastic trend. We love the numbers here. And now the gap down on the deep pullback, a little below the 200-day moving average. And notice here, one of our favorite gap down reversal triggers is when it pulls into the gap. And then we play it to the gap fill here. So an entry here around 325, 326, and then targeting 341 is the swing that we are watching for now. The other thing we'll do is if it does continue down, watch for the strong reversal. You could play that as well. But notice here also, if it does fill the gap, it also remounts the 200-day moving average. So doubly strong kind of setup here. So watch the next couple of days. If it doesn't continue down, watch for the close into the gap here, and then target about 340 for the target there. Again, Tesla not doing that. Now notice here, Amazon, Apple, also they were very strong patterns. We love them. Of course, we're in Amazon right now. Sympathy plays, they have no news on their own. This is only because of the fear of Google and Tesla, and more so Google, and the idea that these companies are spending a lot as well, which they are. But they're also great. They're revenue drivers as well. So we'll see what happens with these. But my expectation 6 months to a year from now, it won't matter. These things will be crushing it. But that doesn't matter for us right now. In swings, we want the setup. So gap down reversal here for Google, and we'll see what happens with Amazon and Apple. And of course, I'm still holding Amazon here, which is down about 4%. All right. So that's Google and Tesla. Obviously very important stocks. And you can see what SPY is doing today as well here. The gap down about 1%. Qs here, obviously more impacted here, 1.6%. And then IWM here down about 0.75%. Not as impacted by big tech. And look at all the green in the Focus 50, even though Qs and SPY are down over 1%. You would expect maybe 3 or 4 stocks that are green here, but almost half, 21 of the 52 here are green here. And a lot of engineering and construction, which we've been focusing on, VRT, PWR, STRL. We could throw FIX in here as well. Here's FIX as well. And then the utility AI plays, GEV here. And we've loved SNDK and MU. Those are both triggering entries today. So we can see SNDK, not quite at the 50-day moving average, but I think it's very good for a potential entry. And then MU here as well, good for a potential entry. GEV, I think it could be entered here as well with a stop under the range and targeting top of the range. Earnings are out of the way. It did gap down on earnings. And then FIX about to hit the 50-day moving average. Let's look at SpaceX real quick as well. Maybe a potential aggressive rubber band setup here. And we keep talking about this because I keep getting questions about this. But remember, we talked about this here. Don't enter in here. This is the euphoria. Especially if you like SpaceX as a long-term play or a position trade, a longer-term hold, wait, you will get a much better opportunity. And we can see here, SpaceX went up to 225 and is sitting at 115 right now, only a month later. Now, this is a spot where you might want to, if you like it long-term, it's at 115 right now, maybe start thinking, if you were thinking of putting 500 shares into this, maybe put 100 in here. And if it goes lower, put another 100. If it goes lower, put another 100. If it goes higher, put another 100. You might want to start position building here for long term. Now for swing, maybe we have a rubber band set up here. This is one of those where take a little shot, 115, place your stop at 110, small position size, don't risk too much, maybe even less than 1%. If you lose, so what? Don't care. But if I win, I can get, on 5 points of risk. And if it gets back up to the IPO open at 145, that would be 30 points on 5 points risk. That's 6-1 here. So I think you could take a shot at it here on SpaceX. And then one last stock, IESC, one of our engineering constructions. I think we talked about it here, but I really like it here at the 50-day moving average.